You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday. Everybody's been working for the weekend and it's almost here. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We actually do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room, and that's reserved for members only and those who are taking our 1-week free trial. If you've not taken your 1-week free trial, just go to mytradingiq.com, and at the top of the page is a button that says, you guessed it, free trial. Now, today's a great day to start the free trial because we'll get your charts and indicators set up for you over the weekend so that when the markets open Sunday night at 6 p.m. Eastern, you'll be able to hit the ground running right along with the rest of us. At 11:30 a.m. Eastern, the live training room ends. We take a 30-minute break, and then we come back at 12 noon Eastern for the afternoon broadcast. Now, there are two different ways to join this afternoon broadcast. The best way, because you only have to do this once, go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. Every trading day going forward, about an hour before the afternoon broadcast starts, you'll get an email. In the email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, I call that the better way because it gives you access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days that you're out of the office, away from the desktop, or you're just busy and can't join the afternoon broadcast live. Not a problem. Simply point the browser on your internet-connected device to our YouTube channel. This afternoon broadcast is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. Our YouTube channel is easy to remember. youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, even though we've been around since 2005, but if you're new, the YouTube channel is a great way to get to know who we really are. Anybody can say anything today. But what were they saying and doing 6 weeks ago, 6 months ago, a year ago, 2 years ago, even more? Thanks to the power of the internet, you can actually find out. On our YouTube channel, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. And of course, we don't expect you to listen to every broadcast in its entirety, but pick days at random. And then fast forward to where you see Michael doing a recap of the live training room, or you see me doing the recap of the Logic 247 alerts and the concierge trade alerts. If you do that, again, over a period of time, just picking days at random, you'll find there's a thread of connectivity, a thread of continuity woven through each and every daily broadcast. So if you have some free time this weekend, there's a project for you. Okay? All right, let's open with a word of prayer as we do every day. Now, for about the last week and a half, we've been talking about being brave enough to believe. It's easy to doubt, but true faith takes great courage. In John 20, we find the last and perhaps most poignant encounter between Thomas, doubting Thomas, and Jesus. Let's read that scripture right now. John 20, verses 24 through 25 from the Message translation. But Thomas, sometimes called the twin, one of the 12, was not with them when Jesus came. The other disciples told him, "We saw the Master." But he said, "Unless I see the nail holes in his hands, put my finger in the nail holes, and stick my hand in his side, I won't believe it." Something in Thomas died alongside Jesus at the crucifixion. Thomas withdrew from the others and isolated himself from those who witnessed the greatest miracle, Jesus resurrected from the dead. When you and I face a crisis of faith, the worst thing we can do is isolate ourselves from the community of other believers. When we do, like Thomas, we may miss the peace, the reassurance, and the empowerment we long for. The determined apostles pursued Thomas to join them again. When they told him they had seen Jesus alive, he declared, "Unless I see the holes in his hands, I will not believe." Thomas, the pragmatist, wanted proof. Afraid to hope and depleted from disappointment, he sought an informed faith. He could not be content with hearsay or someone else's experience. Yet beneath what might seem like a benign request lay a darker truth. Thomas doubted that Jesus had risen from the dead. He attached an "unless" to his willingness to believe. Now, God welcomes our questions. His word can stand up to the strongest of scrutiny. But unresolved doubt can lead to the deconstruction of our faith. Some of us, without even noticing, allowed our faith to erode through one word, unless. We may not have ever uttered the phrase aloud, but our belief systems have become so shattered that we don't know how to restart. We put God's character on trial when something didn't turn out like we thought it should. Or we withhold full confidence in God until something turns out like we think it should. Jesus already knows our unless places, and he meets us right there. He doesn't want us to stay there. We can invite the Holy Spirit to help us come to grips with our doubts and grab hold of faith. Faith replaces the word unless with regardless. Regardless the questions that remain in this life, I will believe. Question: is there an unless in your life that needs to be replaced with regardless? Join me in prayer. Heavenly Father, help us to always trust you with our unanswered questions in life. Thank you for loving us, even in our darkest moments. It's in Jesus' name we believe and pray. Everybody said, amen. Well, happy Friday. I hope it is indeed a happy Friday for you, whoever you are, wherever you are. Now, for those of you that are tuned in via our YouTube channel, you already know the title of today's episode: Common Scams That New Traders Too Often Fall Prey To. We're going to talk about that for a minute as soon as I give you the numbers from around the world, to put things in a global perspective. Starting here in the U.S. with the indices, the cash markets, the Dow's down 17 points, the Nasdaq's down 1.5 points, S&P 500 is down 2 points, and the Russell 2000, our man in the street, is down a whopping 4 points. That's about as quiet a trade as I think you'll ever see. In fact, we've had an entire week of that. This market is waiting to bust loose and bust and move in one direction or the other. If I had crystal balls, I would tell you which direction, but I don't, so I won't. I'd just be making it up. In the commodity basket, crude caught a turnaround. Now, we talked about this yesterday because crude had dropped below the lowest weekly trading zone. So we were anticipating a bounce. When we go to the charts, we'll see how much of a bounce we actually got. I can tell you that we're up 56 cents, trading 77.95 last. Gold, on the other hand, is down $33.90, trading 19.8530 last. That's a drop of over 1.5%. Silver down 35 cents, trading 25.02 last. That's a drop of over 1.25%. And I might say, if you're a long-term believer in silver, and we had a conversation earlier this week about, the commodities that are finite in nature. Soybeans, you just plant a new crop. Corn, a new crop. Indices, they always roll out new contracts when it's rollover day. Okay? But gold and silver, those are finite resources. God shut down production on the 6th day, and on the 7th day, he rested. Now, most of the gold that it's ever been mined is still in existence, whether it's at a Crude gold bar, or those earrings you gave your wife on Valentine's Day. Silver, that's another story. Much of the silver that's ever been mined has been used up in industrial and other applications. Technological, perhaps, would be the word I was looking for. So if you believe in buying the dip, hey, I can't tell you this is the low, but it sure looks good to me. Remember, the all-time high in silver was 50 bucks. We've hit it twice in history. And so at $25, we're halfway there. So do your own due diligence and research before making any investment decision. In the Asian markets at the close, Nikkei down 93 points, Shanghai down 65, and for the Shanghai, that's almost 2%. The Hang Seng down 321 points, that's over 1.5%. And in the European markets at the close, FTSE up 11, the DAX up 85, the CAC up 38. So no movers and no shakers there. So that gives us a red day in Asia. It was a green day for the UK. Not a big green day, but green nonetheless. And here in the US of A, it just became a mixed Radio Friday as the NASDAQ has moved into the green by just 8 points. The S&P has now moved unchanged, and the Russell 2000 down 3 points. The Dow down 13. So it looks like this market's trying to turn itself around. So when we go to the charts in a minute, we'll see what the obstacles are in that happening. So again, the title of today's episode is Common Scams that New Traders Often Fall Prey to. As more and more people turn to trading as a means of making money, the number of scams aimed at new traders has increased significantly. These scams are designed to take advantage of people who are new to trading and do not have the experience or knowledge to recognize the signs of a scam. So we're going to discuss some of the most common scams that new traders fall prey to. And I'll just point out that new traders, if they go to a website where it says 98% win rate or some other such nonsense, because they don't have a background and history in the markets, well, if it's on the internet, it must be true, right? Well, unfortunately not. Now, probably the oldest scam in the financial markets is the old pump and dump. Pump and dump scams are one of the oldest and most common scams in the trading world. In a pump and dump scam, a group of traders or a single individual artificially inflates the price of a stock by spreading false information about the company. Once the price reaches a certain level, scammers will dump their shares, causing the price to crash and leaving other investors with a loss. That's how Mark Cuban cleaned my clock for $350,000 with AG Media way back in 2004. But that's a story for another day. Number 2. So pump and dump, that applies to stocks, okay? That can be manipulated. If you're trading futures, the indices, okay, it is very difficult, okay, to run any kind of pump and dump scam in the world of futures and commodities. But with stocks, because it's so attractive, wow, I can buy, the shares are only 3 cents, but they're saying they could go to 300. Man, if I just put $1,000 into this thing, wow, I may not have to ever work again. So tempting. Don't fall for it. Number 2, trading signal scams. Trading signal scams are another common scam that new traders fall prey to. These scams promise to provide traders with profitable trading signals that they can use to make money. However, the reality is that these signals are often unreliable, and traders end up losing money instead of making a profit. Now, let me give you an example. Let's say I've got an email list of traders. We'll say, I don't know, just to make it a round number, I've got a list of 1,000 traders' email addresses. So if I send out a bulk email telling 500 people that the market is going up tomorrow, and tell the other 500 the market is going down tomorrow, well, half of my email list, they're going to think I'm pretty smart. But my list is now shrunk to 500 who are believers. So I take those people and I tell them 250 of those people that tomorrow the price of whatever is going up, and the other 250, I tell them the price of whatever is going down. Well, 250 are going to go, man, this guy might be really something. He's nailed it 2 days in a row. So now I divide my list again. I tell 125 people it's going up. I tell 125 people it's going down. Now I've got 125 people who've seen me be correct 3 days in a row on the calls that I made. Now you can winnow it down even more, okay? But at some point you've developed, even if you keep working it until you've only got 50 people, I mean, they're stunned because you've not got it wrong once. How difficult would it be for you to have enough faith to send them $500 or $1,000 to buy their trade signals, which are actually worthless? Careful. Now, a new scam is fake trading platforms. These platforms promise to provide traders with a secure and reliable platform to trade on. Everybody's thinking FTX. Fair enough. However, the reality is that these platforms are often fraudulent and designed to steal money from traders. Some of these platforms may even ask for personal information, such as credit card details. And of course, in the world of crypto, the whole know your customer rule from the SEC, you have to give up not only your credit card number, but your birth date and your social security number. Yeah, you're just begging for trouble, okay? Identity theft is a huge, huge industry. And once somebody steals your identity and goes and does nefarious things, getting that fixed, getting people to believe that really wasn't you that bought that Lexus, can be hard. Investment scams. They've been around since the beginning of time. These scams promise to provide investors with high returns on their investment in a short period of time. However, the reality is that these investments are often fraudulent and investors end up losing their money. Bernie Madoff pulled off the biggest pyramid scam in financial history without ever making a single trade with the tens of billions of dollars that passed through his firm. As long as enough people keep putting money in, when somebody, wants to take their money and move on, you just cut them a check, and they're so happy they tell their friends, I invested this much, I got back this much. Now 10 more people are chasing Bernie. So you had to beg Bernie to let him mismanage your money. Forex scams. These scams promise to provide traders with high returns on their investment in the foreign exchange market. However, the reality is that these returns are often exaggerated and traders end up losing their money. Forex scams are huge. When you hear about the trillions of dollars that exchange hands each day in the foreign exchange market, what you're not told is that about 99% of that is done between banks and central banks. So it's an illusion. And when you're in the desert, it really does look like a pond and palm trees. Be careful. There's so many scams out there just waiting for new traders to clean their clock before they even get to Wall Street. These scams can be very convincing, and it can be extremely difficult for new traders to recognize them. The best way to avoid falling prey to these scams is to do your research, become a part of a legitimate trading community that has a good history, and only invest in legitimate trading platforms. Always be wary of any promises of high returns with little to no risk. Remember, if it sounds too good to be true, it probably is. Okay. With that said, just please be careful out there. I myself, I feel like a digital warrior every day as I open my email inbox. I mean, I've got all this stuff from PayPal, supposedly, right? They just want me to click something to install some kind of Trojan onto my computer. Or if you call the number in the email, I did it the other day, I got one. I just went ahead and called the number. And the person answered the phone, PayPal. And I said, you're so full of crap. You don't work for PayPal. Slam. They hung up the phone. So, I just don't want you to get hurt. What we want is for you to learn how to trade so that you don't ever have to fall victim to anybody's scam. We're in week 246 of Logic 247. That's our 24/7 around-the-clock E-mini alert service, which includes crude, gold, silver, the euro, and bonds. Over the last 246 weeks, as of 7 a.m. this morning, this recap will be updated this afternoon. Over the 246 weeks, we've issued over 13,900 individual handcrafted alerts for our members. Now, the purpose of the alerts is not so you can just trade them and not have to, bother with learning how to trade. I know some people do that, but they're going to regret it one day. Because let's face it, at some point, we're going to retire. and we got no plans of retiring anytime soon. Okay, but do you really want to be dependent on someone else to tell you when to get in and when to get out for the rest of your life? I mean, you really can't even call yourself a trader that way. You need to be able to look at a chart, read it like a newspaper or a good mystery novel, and then have the discipline and patience to wait for only the high probability, low risk trade setups. Since the markets opened Sunday night at 6 p.m. Eastern, at 7 a.m. we had issued 69 total alerts. 8 never triggered. We were still waiting on the outcome of 7. Plus, I think I've added a couple more this morning. So that gave us 54 actionable alerts, of which 9 or 17% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Here's a cardinal rule. Never risk more than the potential profit in the trade. And the alerts show you what the potential profit is. Could be $1,000, could be $2,000, could be more. But if you're planning to jump out with 2 points or 5 points or whatever that is, do not risk more than you plan to take out of the trade. It's bad math, bad science. It will not only come back to haunt you and eat your lunch, it will blow your account to smithereens. So don't do it. Now, over the last 246 weeks, we've averaged 20% or less of the alerts being stopped out based on that risk profile I just explained. If you missed yesterday's broadcast, I actually walked through a lot of the individual logic alerts from this week. So if you missed that yesterday, just go to our YouTube channel, youtube.com/CFRN, and watch yesterday's broadcast. Now, the logic alerts can come out at any time around the clock, 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But our original alert service is a little bit different. The concierge trade alerts. They're different in 2 main ways. Number 1, they don't come out around the clock. They're published as a static report shortly after the Globex open. Globex opens each evening at 6 p.m. Eastern, Sunday through Thursday. So last night I got the report out at 6:30 p.m. Eastern. So every one of our members and free trial members had every one of these targets last night at 6:30 p.m. Eastern. So now, because this broadcast is open to the public, there'll be people watching this video that aren't members or trial members, so you didn't have these numbers last night. Grab yourself a screenshot. Because before this broadcast is over, we're going to walk through each and every market to see if the targets were reached. Now, when the report is published, the first thing you do, we'll use the ES as an example. On your 30-minute chart, make note of where price is at this time. It will always be between these 2 numbers. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You still have to look left to spot potential obstacles, previous swing highs or swing lows that may act as support or resistance. And over time, you'll learn how price behaves at a weekly trading zone. This is important to understand. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern, price is always trying to reach a weekly trading zone. If price is above the BBC, it's trying to get to the zone overhead. Price is below the BBC, it's trying to get to the zone below. Resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it can be pretty simple to reach your goal for the day. We have a room full of traders that are getting their goal day after day after day after day. And when you take our free trial, you're able to mix and mingle with our traders, some who've been with us many, many years. So let's jump into the daily chart and see where we stand. It's where we always start. Now you might think, I don't trade the S&P, or I don't trade the daily chart. Well, I trade the S&P, but I don't trade the daily chart. But I do look at the daily chart to give me guidance. You see, the institutions are the ones that actually move price, because their accounts are denominated in hundreds of millions and billions of dollars, while the typical retail trader has an account denominated in maybe thousands or tens of thousands of dollars. So, institutions, because they have so much money to deploy, they're looking at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Now, I posed a question, seems like an eternity ago. Was this a major head fake? We still haven't resolved that. You see, blue and climbing, the green line's the BBC, it just stands for bull, bear, cross. Price gets above it, you expect higher prices. Below it, lower prices. Above it, higher prices. Below it, you get the idea. Now, you see how the step line, that's the black line, in blue and climbing, see how they're parallel on this nice move up, okay? Until the step line crosses. That tells us pullback's on the way. But what's happened is price, once blue and climbing gets directly above price, it actually becomes resistance in many cases, as it has for 1, 2, 3, 4, 5, 6 trading days where we actually touched it. There's day 7, and here's today, day 8. Now we're well off the low of the session, but we're also well below blue and climbing, and we've not touched the step line. If we were to close right here, right now, for the week, I would suspect that on the open Sunday night, we will head down to the top of this trend line and the daily BBC. Now, typically we like to see price pull back to the BBC because that gives us a great leg to trade. But in this case, instead of price pulling back to the BBC, what's happened, because we've stagnated, the BBC has risen to meet price. So the chance of this pullback holding is not as strong as this one was, or this one was, or this one, or this one, or this one. Now, everything I've said about this chart is true of every market, every individual stock, every crypto, and every forex pair. Everything we teach and the tools we provide are fluid across all markets and all time frames, from a 1-minute chart to a monthly chart and everything in between. That includes tick charts and range charts and whatever you got. Price flows the same across all markets and all time frames. Support, resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So if you'll just spend 2 minutes with the daily chart of the market or markets that you trade, when you sit down to look for trading opportunities, you'll have a good idea which way the wind's blowing, okay? Now, we are off the high of the day, but we got an obstacle here, we got an obstacle here, we got an obstacle here, and an obstacle here. Price will often take the path of least resistance, and that certainly looks to me like a move down at least to the daily VVC and the top of this trend line. What happens then? Well, when price pulls back to the VVC, we usually get a nice bounce. And it pulls back and we get another nice bounce. Again, this time, instead of, really pulling back, because we've stagnated sideways, the VVC has risen to meet price. So it's a different dynamic, okay? I can't explain it all right here, right now, due to lack of time, but feel free to book a one-on-one mentoring session. I'll be happy to go into detail with you, our strategy, our methodology, how the indicators play in, all of that, okay? So the vertical line on this 30-minute chart, and all alerts are based on the 30-minute chart. The vertical line separates today, Friday, from yesterday, Thursday. But remember, today, Friday, started last night at 6 p.m. Eastern. This candle right here. So it was on the open of the second candle that the alerts went out. The CTAs were published. So we basically stayed below the BBC. We dropped to the weekly trading zone and found support. When the market finds support, it's going to go look for resistance. From support, it found resistance on the pullback to the BBC. Pullback holds more often than not. So this pullback held. We caught another leg to the downside. So there's plenty of room to get your goal for the day here, here, and over here. We actually touched the short target. But see how everything's just bunched up? This is a market looking for direction. Once it finds it, it's going to blow your hair back. That's my thoughts. On the Dow, we opened here, pulled up to the zone, which we expect to be resistance. Price is below the BBC. As soon as blue and climbing turns to red and falling, all I got to do is pull the trigger. Took us down right to the target, to the tick. Support sent us looking for resistance, which we found at the zone. And then we had this little snarl, and then we made a run at the long target. Came a little bit shy, but plenty of room to get your goal for the day. Pull back to the BBC, another run at the target. And then this candle here touched the short target. We've now bounced back up to the zone and red and falling. We're below the BBC. So where's the window of opportunity? I hope it's so obvious. Right there. $33,850 to $33,830. It's 20 points, $5 a point, $100 per contract traded. And you say, well, that's great, but I need a little more than $100 to live on. That's why, as part of our training program, you start out in the demo account until you qualify to go live. You go live with one contract. Once you increase your account balance by $2,000, our blueprint gives you the green light to add a second contract. First contract is funded with startup capital, but the second contract is funded with profit you earned in the market. The same is true of the third, the fourth, the fifth, 10th, 20th contract, okay? So that little area right there represents $100 with one contract. With 5 contracts, it represents $500. 10 contracts, that's $1,000. $1,000 a day puts you in the top 3% of wage earners worldwide. Russell. 70% of the time, price is going to consolidate at the weekly zone. We've published the zone since December 14th, 2009. Our members and trial members get the zones Monday morning at 6:15 a.m. Eastern, before Wall Street even wakes up. So we run up and hit the long target, and then we dropped below the BBC and hit the short target, and then some. And then we bounced back up to the zone, found resistance. We're below the BBC. Got to overcome the step line. I would wait for price to drop below the short target, then short it down to the low of this candle. If you can make it no more complicated than that, okay? It's really difficult for new traders because they feel like they have to learn so much. You only have to learn enough to get your goal for the day on a consistent basis. Michael, are you there?
I am here.
Okay.
Yes.
I just, guys, we've made it through the S&P, the Dow, and the Russell. Michael's going to give us a recap of the live training room. Then we're going to trade for 30 minutes on the TradingView platform. And then I will finish, once we're done on TradingView, I will finish recapping the other markets that we did not get to yet. Looks good.
All right. Good. Here we go. All right. Good afternoon, everyone. Today is Friday, the 21st day of April, 2023. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com. Right here is a set free 5-day training now, 9:30 to 11:30. Click on that. Once you do that and sign up for the trial, you should go here to trading platforms and download whichever trading platform you want to use. I'm going to be showing you mainly TradingView. You don't have to actually download that. You just sign up for it. But watch this little video. Watch the videos on all of them if you're interested in trading on any one of these. Just watch the videos and it explains everything for you. It's pretty self-explanatory. All right. Now the recap. We had a pretty good day today compared to how the rest of the week has been. We had a pretty good day today. It was active enough this morning. Today was our only real day that we had any decent news. So I was hoping for a little more volatility today, and we did get it. They did not disappoint us. Today, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 21st day of April, 2023. We made 73 ticks in the NQ, 12 ticks in crude. We lost 10 in gold and made 24 on the ES. That puts us at $685 a contract on the morning session. Today it took 1 minute and one trade to get $640 a contract, and we took a total of 17 trades this morning. That was 32 ticks on our very first trade on the NQ. As soon as I put the trade on, it ran, it hit my target, and then gave me a couple of ticks slippage, positive slippage. Today, as of now, we're at $6,402 per contract on the morning session with one contract, averaging $457 per contract for 2-hour business day. On the year, well, hang on, let me finish this stuff. We've gone 74 out of 76 days getting our goal for the day. This is starting over again. We are now on day number 1 since our last non-agreeing day. It's twice this week we started over. That is unusual, really unusual. We've gone 423 business days since our last red day. And on the year, we're now at $38,555. That's over 76 trading days, averaging $507 per contract per 2-hour trading day. If you were to quit trading when you get your goal for the day, so far with 4 contracts this month, we're at $8,190, but you would have averaged, only had to work 19.45 hours, and you would have averaged $1,296 per hour on the year. Right now in the month, even though we had to work 2 full hours one day, and we didn't actually even get the goal, it was right here. We had to work 2 full hours, and we didn't even get the goal. We still managed to be, so far this month, we've worked about 4.5 hours, and we're at $8,190 for those 4.5 hours. So we're averaging just over $2,000 an hour on the month. On the year, though, you'd be at $1,296 per hour. Okay. So as we keep moving forward and keep adding contracts toward the end of the year, this number is going to get bigger and bigger. This number down here is going to get bigger and bigger. We start out the year with one contract, and that number is down like the hundreds. And then as soon as we start adding contracts, that number gets bigger and bigger and bigger. Because as we get to once we get up to say 10 contracts, this $640. Well, if we had 8 contracts in the same minute, this $640 would be $1,280 in that same minute. So yeah, you can see how that works. Anyway, let's get into it all. Okay, in here we traded something on everything today. So we'll start out with the gold. Now it is 12:52, so I have 8 minutes to get this in. Remember, after this at 1 p.m., we're going to be doing the live stream. If you go here to TradingView.com, go to upcoming streams, it's right here. We'll be doing this live stream. That was weird and loud. We'll be doing this live stream right here. Okay, that is at 1 p.m. All right, so that said, let me scroll all the way back here, and on gold, we started out the day, we didn't get any of this stuff. There was a ton of movement here on gold, just a ton of movement. We had a high impact news event that triggered this morning at 9:45. This gap right here is what I was saying we were going to fill. This is gold, right? Yeah. This gap right here is what I kept saying we're going to fill. It was 5.6. It was 3.1 up to 5.6. I kept saying we're going to fill that gap eventually, but it really tanked before it did come back up and fill it. But it did eventually come all the way back up here and fill that thing somewhere in here. Anyway, if we go back here, once it had this big move, we didn't trade anything through here, and had little gaps all over the place in here. If you look at them, there were little gaps in here and here and here. And I wasn't trading it much at all this morning. On the gold, I only had 2 trades and I ended up with minus 10 ticks. After all this movement, I ended up with minus 10 ticks. Weird. I had this first one right here that I had to break even on, and the second one right here that I stopped out on. This one stopped me out to the tick before running a long way up. And then we get over here. We had a shorting opportunity there, and another one here and here. I didn't get any of that. Got all sideways in here with no trades. Then we get into the break. Right here during the break, it looks like right here there was a short. Here there was a short. You wouldn't have taken that one, and here was the short. So this and this would have been break even, and this would have been profitable. This you wouldn't have taken. And that was it with the gold today. On the crude, now let's scroll all the way back here on the crude. Right here was our first trade on the crude. That's what we picked up on that. 10 ticks on the very first trade on crude, and then we had a break even there and 2 ticks over here. That got us to plus 12 on the crude. Looks like we didn't trade it again. If we had traded it, we weren't looking to trade anything right in here. I'm not sure why we didn't trade anything right in there. We didn't do anything there or there. And then we get into the break. There was 1 trade during the break. 2 trades, I guess. 1 right here that could have been profitable. 1 right here that could have been profitable. This one you wouldn't have done because you didn't put in a higher swing. This one over here we wouldn't do because we didn't put in a higher swing. This one here we could have done. Would have been break even. This one right here, if we would have done it, it would have been a stop out. But I think I was looking to get a higher swing in over here. That's why we didn't do that. And it was the first pullback after a trend change. So the crude, we ended up with just plus 12 on those couple of trades that we did take. The ES, what did we end up with the ES? Plus 24, but we didn't have a ton of trades there either. Break even trades right here. Okay. And those wins right there. That was all we had. Started out right here with the very first trade on the ES. We picked up 16 ticks on this one and 8 more ticks on this one. Now this was a really nice measured move right here, the way that this came together. It was just like right here. You see how we don't have an arrow on this one? That's because this didn't get into the overbought, right? That was one of the questions that was in the room last week, was would that still be a trade? And yes, it would still be a trade as long as the black line is in the red. All right, if the black line's in the silver, it's not a trade. If the black line's in the green, it's not a trade. Now, if the black line's in the silver and you commodity overbought and get the arrow, that's still a trade. All right, but the way it is right here, the black line's got to be in the red to take that trade. But if you look over here at the trade rules, I added this to the trade rules just to clarify for everyone. The entry rules for the trades at the top, all trades must come after a higher or lower swing, and all trades must be in the long-term trend direction. Okay, so right here, lower swing, pullback, long-term trend is bearish. This is the long-term trend up here. Bearish, lower swing, pullback, long-term trend bearish, bang. Right here, we don't have the lower swing. Long-term trend is still good, but we don't have the lower swing. That's why we weren't interested in that trade, you see. That is why we have those rules. Okay. Over here, we had a break-even trade there. Did put in a higher swing, got here, got another break-even trade, did not put in a higher swing. We're not interested in that one. Over here, we did put in a lower swing here, pulled back a little bit deeper. We took this one, got another break-even, and that was it for the crude oil. Right, that was the last thing we did with crude. And during the break, it doesn't look like it gave up very much at all. All right. I'm sorry, crude, the ES, not crude, the ES. All right, so the NQ, this is where we picked up our goal for the day, and we had the most trades on the NQ too. That's not unusual for the NQ to give the most opportunity. Okay, but that goes over here somewhere. We started out right in here. This is our very first trade right here. We picked up 32 ticks on this one. Got a short here right at the open, and 32 ticks, bing, we had our goal for the day. Right here, I ended up with a break even and another break even, and then we stopped out on that one. That put us back down to 12. And it got really sideways here for a little while. Well, we had the news event we were waiting on, and then the news event triggered, and then it took a few minutes to digest it, and then it started to move. And we took this trade right here, and on this one, on the NQ, we went from 12 to, we picked up 30 tick, not this one, I think. We went from 32 down to 12, and then we picked up 30 ticks, went to 42. I think one of these other ones in here we picked up, I think this is where we picked up 30 ticks, and this one we picked up 1 tick. I'm pretty sure that's the case. Yeah, I'm pretty sure that's the case. So we got 30 ticks on this one. Let me just put that on there. Right here. We picked up 30 ticks on that one to get to 42, and then 1 tick on this one to get to 43. Then we had a break even, another break even. Then in here we picked up this. This is what it's looking like a 1 tick, and then 30 ticks again. That's how it came together. So I got 1 tick back there, 30 ticks here, 1 tick here to get us to 43, and 30 ticks here to get us to 73. That's how it came together. Okay, and that was the NQ. Now during the break, well, actually that was all we did with the NQ. We didn't get to the break yet. During the break, there were a bunch of trades here on the NQ. If you follow the rules, look for the higher swing every time, just keep following the rules. There were a bunch of trades here you could have taken. And that's it for the NQ today. So we ended with plus 73 on the NQ. Now I gotta jump into the other session over here. Hopefully I have it going, and it does not look like I have it going over here. That's no good. Let me see if I have it going somewhere else. It does not look like I do. So let me see if I can still bring that up before it's 101. I gotta be able to scroll down here to this. Oh no, I gotta go to community, live streams. And it's gotta load it up, and then I gotta be able to go down here to upcoming streams. I did not make it, so I gotta do it on this one. Okay, so you guys hold this thought for a minute. I'm gonna pause that, and then I'm gonna go here and go here and hit connect and go here and bring this over here for a moment. I'm gonna have to leave it over there, I guess. Let me just hit this and this and this and this. refresh, and do that again, that, and that, and this, okay. And this, and that. I will bring this back over. All right, so everybody that's on the live stream right now, just give me a moment here. I will get this all going for you in just a second. Here it comes. Should be coming up right now. And there it is. All right, so the live stream, oops, hang on, cancel. The live stream should be running right now, and everything should be going. For everybody that was just in the GoToWebinar, I'm sorry, I just messed all that up. Didn't come together really well for me this morning, but it's okay. We got it. We got it now. So now we're in the live stream. We're just going to trade for half an hour. Okay. If you happen to be in the live stream and you have not started following us yet, just hit the follow button. You can follow us. I was just going through everything that we did this morning. If you have not taken a free trial with us and you want to, go to mytradingiq.com, sign up for the free trial there. I know there was someone in here yesterday who said they signed up for the trial, but I never saw it come through. I don't think I did anyway. Anyway, so yeah. So far this morning, in the room this morning, in the 2 hours we traded this morning, we were up 73 ticks on the NQ, 24 ticks on the ES. We lost 10 in gold, and we're up 12 on crude oil. So we did have quite a bit more volatility today than we have had the rest of the week. So we'll just get into the trading here. All right, now that the live stream is running, anybody that has any questions or wants to see any symbol, all you have to do is type it in. And again, anybody that's out there in the GoToWebinar that is still following us over there, you can just type anything in there as well. Okay, and I'll be happy to show you whatever I can, whatever comes up here. Right. So for right now, we're a little bit choppy over here on the NQ. We're very choppy here on the ES. The long-term direction is completely flat here. It's a little bit bullish over here. And on the gold, it's just changed directions here, so it's starting to push up. The crude oil just put in a lower swing, so this is good on the crude. If we get a pullback on the crude, we'll be able to take a trade there. Okay. Again, for anybody who's watching, what we're looking for here, the long-term direction of these outer bands. Okay. What we want is to have the long-term direction, trade in the long-term direction. So we're trading on pullbacks in the long-term direction. Now, the whole idea is, the markets are always going like this, right? They're going down and up and down and up and down and up and down. And what we want to teach you how to do is get in here, get out here, get in here, and get out here. And when it pulls back up, get in there and get out there. Take these pieces out of the middle, okay? That's what we want to teach you how to do. All right, so like right now, it was going up and then down and then up and then down and then up and then down. Problem with this one is right here, it didn't exceed that on the push up. We had this one, then the pullback, getting in down here at the bottom, the push up, didn't continue the trend. All right, so that's what it has to do right here. It has to continue the trend before it falls down below this level. It has to get up above that level. Right, so like over here on gold right now, it went up and down and up and down and up and down and up and down. And right now, it needs to go up. All right, there was no trade here because it didn't hit the ribbon and it didn't hit oversold. So right now, just to prove that it's actually trending, it needs to go up above this level right here. And then we'll look for it to go back down and we'll jump in here when it hits the ribbon or it gets down into oversold. Pops out of the oversold anyway. Okay. That's what we're looking for. Again, if you've not taken a free trial with us and you want to, go to mytradingiq.com, sign up for the free trial there. If you're not following us on TradingView and you want to, just start to follow us on TradingView. It's a pretty simple process. Just hit the follow button. If you do that, you'll be alerted every time we create an event like this one. A little notification thing over here will let you know. Okay. Yeah, So that's it. Again, if you're not taking the, I mean, if you want to take the free trial with us and you haven't, go to mytradingiq.com and sign up for the free trial there. Okay. Yesterday there was a fella, Deep Red. Hey, Ronnie. Yesterday there was a fella, Deep Red, who said, or D Red, or Deep, I don't know how to pronounce the name with the accentuation. But anyway, there was somebody yesterday who said they took the free trial, and I never saw it come through. So they thought they took the free trial, but I'm not sure that they did. All right. We got our higher swing over here. Remember what I just showed you a second ago, right? I drew it for you. I said we had to move up, we had to move down. Now, we had to get a move up above here to continue the trend before we got to move below here. All right, so we had all this movement in between. There's no trading, and now we moved up. So now what do we need? We need to move down. That does not exceed this level right here, preferably one that will catch right here. And at the same time, this will go down here, and we'll have an opportunity to buy right here for the next move up, and for the next move for this to go up all at the same time. Okay. All right, let me erase that. No, you are not. You are not. Okay, so we did get the higher swing here. We want to see that pull back and move back up. You want to see it pull back and move back up. And over here on the gold, we want to see it put up a higher swing there too. Remember what I was drawing for you over there? We had the up, the down, the up to there, then the down, then the up, then the down. And we needed to get up above that level before it got down below that level. Okay, so that's what we're waiting for. Over here on the crude, we had the up, the down. Now we need the up. Get some entry up here or up here. And on this one, we need the down. Get an entry down here or down here. And on this one, we need the down to get an entry down here or down here. And we don't have anything on the ES. That's what we're looking for right now. Okay, so we're looking for all those pieces to come together. And hopefully they will, but we'll just have to wait and see if they do. Okay. All right, so we need the pullback over here. We need the pullback here, and we're starting to get it here on the crude oil. You see the crude oil is starting to pull back up. We want to see this black line get up here into the overbought, right? And right here, we want to see this pull back up and get into the ribbon, if possible. Okay. Thanks, Ronnie. I'm glad you got your 2 points, but remember, it's the weekend. You don't want to be kicking yourself going into the weekend. You got your goal for the day. You want to just take that, be happy with it for the weekend. Think about next week. All right, especially ending this week, because this has not been an easy week to trade. So right here, we're looking for the pullback down into the ribbon, or this get down into the oversold. Okay, so this is all coming together just like we wanted. Now, if we get a down close on this, everything's come together just like we wanted on the NQ, right? So here we have an opportunity coming up right here on the NQ to get long. If we get an up close on this bar, now the low of this bar is here at 81.25, so the high is going to be at 85.25. 85.25. So if you get an up close at 85.25, get one more tick, and it's gone down a little bit more. Okay, so now it's got a new bar, but it's still okay. We have a low here now of 79.75, so add 4 points to that, plus a tick. So it'd be 84. 84 is what you'd be buying right now. Okay, like this. Hang on, I'm trying to read over so you can see it ahead of time. 84 is what you'd be buying right now. Okay, now I know that because this is a 16 ticker range bar. It's a 4-point range bar. So I know that the bar should close up. It actually should close up right here at 84. So one tick higher than 84 is going to put us in right there at 84.25. So that's perfect. Now I have a strategy on this that runs a stop to break even after I get 8 ticks in profit automatically. See the stop is down here at minus 20 ticks, and I have a profit target up here at 30 ticks. So I've already hit that profit target of 30 ticks a couple of times today. We'll see if it doesn't stop right here and you get all the way down to the minus 20. I think it's going to push up from here. It probably should push up from right here, but we'll have to wait and see. Over here on the crude oil, we didn't pull back deep enough. Remember, we had to get all the way back. Nope, we stopped that on the NQ. On the crude, we had to get all the way back up into the ribbon, or this had to get up into the overbought. Either one of those happened. And the NQ just stopped us out. Okay, so let me do this arrow up. So we stopped out on this one. That is our second full stop out on the NQ today, but we had a couple of good 30 tick wins. I'm going to get rid of the drawing objects on here. Erase all the drawings. All right. So now we just have to wait. The crude didn't pull back deep enough to get us into a trade. The gold does not pull back deep enough to get into a trade. And the ES has not done anything to trigger a trade. Okay, so we're just waiting here right now. Let me go back in here for a sec. That is here. Oops. Okay, I'll go back in here then. That would be over here. Yeah, if you're in here and you haven't taken a free trial with us and you want to take a free trial, go to mytradingiq.com, sign up for the free trial there. Right, it is now 1:14, and so far we've only had one stop out trade. It should work its way up here, even though it stopped me out. It still should work its way up here to continue the trend. It should go above 92.5. Right, see the ES is trying to put together a trade right here, but it's just not trending. It's really choppy right here. Crude oil needed to pull back a little bit deeper to give something to us, and it hasn't. So we just have to wait on that. If you're not following us on TradingView and you want to follow us on TradingView, you can do that by just hit the follow button, I guess. I'm not exactly sure how you go about that from your end. But you can follow us on TradingView. Then you'll be notified whenever we do anything like this. Okay, and we try to do this every day at 1 p.m. Eastern time. Try to get done every day at 1 p.m. Eastern time. So this one stopped me out, and now it looks like it's going to make the push up that we wanted it to do. We're expecting it to do. So I don't know. Hang on. Mark. Okay. I don't think Marcus is in here right now. Yeah, he is. He is in here. Okay. Okay, so the 16 tick stopped out. Yeah. And if we go to this, Oops, not there. This. Oh, it'd still be going. All right. So the gold needs to pull back. The crude needs to pull back. The ES, we're not going to do anything with it. And the NQ is just going sideways now. It is now 117, so I only have 13 minutes left. We will just have to wait and see in a few minutes. Roger. Okay, though. I see it. Yeah, I know. All right. So I'm waiting here now for a pullback on the gold. We don't quite have it yet, and it is now 119, so we only have 11 minutes left. So right now we're looking for a pullback up to the ribbon here. Now it's got to be a deep pullback on the NQ. Okay, because I don't like to take the first pullback unless it's a really deep pullback. I don't want to have a shallow pullback that gives us an arrow and then take that. Okay. All right. So we have pulled back deep enough now on the gold to hit the ribbon. 88.2 up to 89 right now on the gold. Okay, and there it is. Now that is a ribbon trade. That is not going to be an arrow trade. All right. So sorry, I got distracted. This didn't pull back deep enough here on the NQ for me to want to jump on that. All right, I want to go back just a little bit deeper. This is a shallow pullback, and a shallow pullback after a trend change. So this would work just fine, but I like to see the first pullback. I like to see go a little bit deeper and actually hit the ribbon and bounce. Okay, so right now what we've tried to establish here right now is everything that we're looking at before, but now it's going like this, right? Now that's why I would like a bigger push right here, something more along lines of that leg right there. So the combination of these two legs would be more like this. It'd be down here somewhere. That's what I'd like to see. That would be a nice easy structure or pattern to repeat. The gold is starting to move. Sorry. The gold should go up to right now. It should go up to 90.0. Did I draw that in? Did I even say that yet? It should go up here to 90.0. 90.0 is where that should go up to right now. The swing high is right here at 89.7. And if you look at the rules, let's go here to TradingView.com. And if you go to trade rules, now the entry, the entry and the risk management. Yeah, well, first the entry is just getting this part of it right. Waiting for the up close off the ribbon right here. Now there's no arrow on this one because it wasn't oversold, but it was the up close off the ribbon. So that is the proper entry. So now getting the proper entry is step one. Now the next step is the risk management. Okay, with the risk management, you got to follow the rules. The 7-tick range bar, a 10-tick stop. See, it's right there. Trails to break even after 4 ticks in profit. So we got to get 4 ticks in profit. It's got to get right here, and then we'll trail that stop to break even. And then you go down here to the trade exit stuff, right? 3 parts: the entry, which we've done, the risk management, which we're in the process of doing, and then the exit, which is going to be next. It needs to go up 1 more tick to bump the stop to break even, and then we'll have steps 1 and 2 done. There it is. Steps 1 and 2 are done. Now you come down here to the exit part. Look left for price swing high or low. Where is that? That is right here, 89.7. Right there is a price swing high or low. That's the minimum that you should get out of this. All right. Then continue looking in the DOM, which I'll teach you how to do if you take the free trial. Look in the DOM for more different targets. All right. Different targets. So learn to read the DOM. Step 1 is look left. Step 2, learn to read the DOM. Step 3, trail until the green line. Oops, not there. The green line right here, this green line right here, turns up and gets all the way up into the cycle and gets all the way up into the overbought. All right, that's step 3. Now that's going to take time for that to happen. The crude oil here is finally pulling back deep enough to give us a trade, but it really didn't follow through on the push right here. So we go to stop to break even on the gold, and now looking left would be right here, 89.7. DOM suggesting 90.0, and as we progress, we'll see what else the DOM gives us, okay? If it changes things for us. And over here on the crude right now, well, there's a few things going on. We have the crude going on, and we have, well, the NQ really didn't put in a lower swing over here. I was going to say we have the crude and we have potential NQ, but it really didn't put in a lower swing back here. So getting up here, almost up to the 0.7. I'm just going to lock in 1 tick on this and keep an eye on the crude. 77.72 on the crude. Subtract 8 from that. That's what you would sell. Okay, so it'd be 77.64. 77.64 is what we'd be selling on the crude. Now let me jump back over here for a second. Mess this all up. Okay. So yeah, if anybody signs up for the trial, if you sign up for the trial today, we'll get your indicators working 2 days. So you'll have them over the weekend, be able to check things out over the weekend, watch some of the videos we provide. And we have thousands and thousands of hours of videos. So you need to watch a few of them to really get the gist. But so I'm waiting for gold to finish its move up. Now let's look at one more thing. I'm waiting for crude to finish its move down and gold to finish its move up. Now, if we were going to go by leg lengths here, let's just start with here to here. Okay. We use this for our leg length. I do have that. Okay, that is good. We'll go from here to here is our leg length. Okay. From there to there, pretty good. from there to there. Pretty good. So everything is pretty much in agreement here that it should get up to this level or this level. All right. So I'm going to just keep trailing my stop on this and see what happens. Right, as it moves up further. I want to see it get up above 89.8 right here. Once we get up there, I think we're going to see some more numbers open up on the top. There it goes. I'm going to lock in a little bit more on this. And all the way up here, 90.2 is where I want it to go. That would satisfy the leg. And then we'd expect a retracement, right? So there it goes. Perfect, right? So now we just trail our stop pretty close. Now we're going to stop at +8. And the crude oil is going to, sorry, the crude oil here. The stop goes to break even on the crude. Oops, break even on the crude. There, there, there. Okay, so on crude right now, I like it all the way down to 77.50. All right, now I've done, let's do this, and I'm going to lock in a little bit more here on the gold. The gold is looking like it's going to go all the way up here to 90.9. 90.9. Okay, so I'm going to lock in 10 ticks on that right now. And if it gets all the way up to 90.9, that'd be 19 ticks on this very trade. The crude should get all the way down to 50. Okay, so we got the 10 ticks on the gold. 10 ticks on the gold, and the crude should go down to 50. All right, so let me mark this up over here. The 10 ticks. Now that was just a textbook ribbon trade right there. It didn't have the arrow because it didn't go back deep enough in the slingshot to get the arrow, but it did everything else right. Okay, so now remember what we're doing. We're doing a leg up, a pullback, a leg up, a pullback, a leg up, and now we're ready for another pullback, right? That's what should happen, right? Anybody agree with me on that? I think you all do. That's the way the markets work. So our indicators are there to guide you, give you the right places to enter. So you can enter with confidence and then minimize your risk by getting the stop off, and by getting the risk off the trade, getting your stop to break even. That's what this part right here is, the risk management. Right. So for the gold trade, step one was a long trade without the slingshot. It was this one right here. Black line and ribbon must be on the bottom and in the green. Must come after a higher or lower swing. Must be in long-term trend direction. So this right here was the swing. This was the swing, the higher swing. This was a long-term trend direction. This was on the bottom and in the green. All right, so we bounced off the ribbon right there. This one over here, this one had the same thing. The long-term direction is down. The lower swing is right here. We hit the ribbon and gave a down close. We got an arrow on this one because we also came out of the overbought. So we're still in that crude trade. Here it is right here. We're still in that just barely. And what should this do? It should go down below this level right here. So if we go back here to the trade rules, now the final part, look left. This is the exit, right? So what I just did with the gold, look left. I looked left, which was right here. I said if we get up above there, then I was looking for the DOM for more information. The DOM originally gave us this number right here, and then it gave us more numbers up here. So we were able to take advantage of all that. Learn to read the DOM. Now the one thing that we weren't able to do, the green line is just now making it up into the overbought area. Okay. But because we got out where we did, it says trail stop behind leaving a few ticks until the green line reaches the oversold or overbought area, then tighten stop. So we tightened it up pretty close after we got 10 ticks in profit, but you can see right now it's reached the overbought area. So now it should pull back and do it all over again. We just took a break even on that crude, by the way. Put that in there. That is yellow. What time is it? Oh, wow, it's 1:31. Okay, so that's how we're going to end the session, guys. All right, so let me jump back over here and see if there are any questions. Oops, sorry, I'm clicking on the wrong thing because they're backwards today. Jump back over here. There are no questions. Nobody has to see any other type of symbol or anything. All right. So that is how I want to wrap it up for today. All right, for this session. For anybody that's out there right now in the TradingView live stream, if you send us your, go up to mytradingiq.com. and sign up for the trial there at mytradingiq.com. All right. The trial is absolutely free. We don't ask for a credit card or anything like that. Just sign up for the trial. Give us your TradingView username, and we'll get you set up with your indicators today, probably within the next hour or so, half hour, 15 minutes if you do it right away. Could be 5 minutes if you do it right away. Anyway, go to mytradingiq.com and sign up for the trial out there. Okay. And if you do it right away, we'll get you set up so you have your indicators over the weekend. If you don't do it right away, we'll still get you set up so you have your indicators over the weekend. But if you do it right away, I'll wait for it. So I'll give you about 5 or 10 minutes. That is it for the live stream. I'm going to stop the live stream. I'm going to head back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Ending the stream now. Just about done. There. Now the stream is done. Okay, so we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain. Yeah, if you act now, Martin, act now.
But wait, there's more.
Yeah.
Okay, recap of the morning session.
Today, 1 minute, one trade, $640.
Well, you gotta love it when that happens.
Yes, indeed. That is a good morning.
Alrighty. Okay, guys, real quick here, we're going to finish up the recap. We made it through the S&P, the Dow. We got to the Russell, where we hit both the long target and the short target. On the NQ, here's where the market opened last night. We consolidated at the zone. Remember, 70% of the time, when price reaches a weekly trading zone, it's going to consolidate. 20% of the time, it'll get rejected. 10% of the time, it'll slice through like it wasn't even there. Here's a slice. See, this was a red candle all the way down. So price sliced through the zone on the 30-minute chart like it wasn't even there. And then when it ran out of steam, it retraced to the zone it sliced through and continued in the direction of the slice. Does that happen every time? No, but more often than not. So the NQ opened last night. We consolidated at the zone. Caught a leg. Plenty of opportunity. Get your goal for the day. Pull back to the BBC and the zone. The pullback holds more often than not. We get another nice leg that exceeds the target. Then we pull back to the zone again, and we exceed the target, and we almost make it to the zone below. Then we get back above the BBC. We find resistance at the zone, resistance at the zone. So every market so far reached the target. Let's go to crude oil. Market opened here, pulled up to the BBC, the pullback held, and it dropped. Okay, 77.13 down to 76.74. That's $300 per contract traded, even though it didn't fully hit the target. Then we get above the BBC, pull back to the BBC, red and falling turns to blue and climbing, and then we run up and hit the target to the tick. Just this one candle right here opened at 77.70 and ran to 78.40. That's $700 per contract traded in that one candle. Gold. Market opened here. We're below the BBC, so we anticipate lower prices. We've got red and falling. I mean, everything's just perfectly aligned, and boom, here's a target. I mean, this candle opened at 2010. So that candle had $460 in it. A little bit more. And then we continued dropping, and we found support at the zone. That's what we expect. Consolidated for hours. Pull back to the BBC. The pullback held even though we spiked it. And now what are we trying to do? Well, we failed to put in a lower low here. So we're pulling back to the BBC, which we expect to be good resistance until proven otherwise. And then potentially we'll get another leg to the downside, at least to here, possibly to here, perhaps even here. Silver. Here's where the market opened last night. We're below the BBC, so you're only thinking short. And bang, we drop right to the target and the zone. And we catch a bounce. We don't make it to the long target, but we do come back to the short target again, and we're just doing some wide-ranging consolidation right at the zone. And last but not least, the euro. Yeah, I was talking about scams earlier. My phone right now, I just get a text message. Amazon, your code is so-and-so. Don't share it. Blah, 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 blah. So it's everywhere. It's every day it's like you get out of bed, you got to put on not only the whole armor of God, but you got to put on your digital armor, because they're trying to get you everywhere they possibly can. In your emails, in your text messages, on websites. If you're not running industrial strength software to protect yourself, man, just don't shut your computer off until you or immediately go to Malwarebytes, okay? Malwarebytes.com, BYTES, Malwarebytes. And they're not a sponsor of the show. We don't get paid. I'm just giving you some good advice, okay? If you hit a web page, it's got a Trojan buried on it, or you're about to open an email or whatever, Malwarebytes does a great job of blocking all that stuff. I think I have a lifetime license. So anyway, the euro opened. We're below the BBC. We got red and falling, and bang, there we go, right to the target. The market finds support. It's going to go look for resistance. Why did it find support here? Look left. Why did we find resistance here? Look left. We get above the BBC, above the zone, boom, we run to the long target. And then we run back to the short target. It's kind of like paint by numbers. But again, if you become a member, I don't want you to just trade the alerts, okay? Because that defeats the purpose of what we're trying to do here. We're trying to teach you to be self-sufficient. We want you to be able to look at a chart and read it like a newspaper or a good mystery novel, okay? Because it's a valuable life skill. And once you learn it, nobody can ever take it away from you. And you can work and live and play anywhere on planet Earth that has a fast, reliable internet connection. So trading not only offers you the opportunity to earn an above average income, but it gives you freedom, okay? Because not only can you live and work anywhere you want, but most days it shouldn't take you more than an hour or two to get your goal for the day. If it's taking you longer than that, book a mentoring session. Let's get you there. Let's get you where you want to be if you're already a member, okay? And while you're on the free trial, you can also request a mentoring session with Michael or myself or both, because we want you to make a well-informed, intelligent decision before you spend a dime with us, okay? That's how we roll. Since 2005. Okay. We're below blue and climbing on the daily. We're below the step line, but we're literally at the high of the session. High of the session being right here. 41.59. So if we take out 41.60, then you got a beautiful window of opportunity from 41.60 to 41.65. Now, why not 66? Because I always try to be conservative, right? So let's say 41.60 to 65, that's 5 points, $50 a point, $250 per contract traded. Down here, your slingshot, blue and pointing up. The green line down there just hooked up. Doesn't get much better. Just use a smaller time frame to execute so that you can minimize your risk. It's very important that price takes out these highs with confidence. And so, maybe push that up to 41.61 to 41.65. That's still 4 points. That's 2 days of work. Okay, right there. Some places will try to tell you it's about, learning how to get more points. Oh, I took 20 points out of this, or I took 100 points out of that. Okay, great. But can you do that consistently, day after day after day? No, you can't. But what you can do is you can learn to consistently take a couple points out of the S&P, or 10 ticks out of crude, or 10 ticks out of gold. All of those equals $100 per contract traded. And as you follow the blueprint, and as you increase your account size, you're able to use your profits to add additional contracts. Those 2 points that make you $100 a day with one contract, once you hit 5 contracts, that's $500 a day. And once you hit 10 contracts, that's $1,000 a day, which puts you in the top 3% of wage earners worldwide. But please do not make the mistake of falling in love with the math and just diving in head first before you know what you're even doing and start trading multiple contracts with real money. I guarantee you will lose every dime that you put in that account. You're struggling now. If you're struggling, if you're someone who's not yet a member, if you're struggling, it's because you haven't had someone teach you how to do the job. You may have read books. We like books. You may have watched a lot of YouTube videos. We make one every day ourselves. But that's no substitute for a living, breathing teacher instructing you 2 hours every trading day in live markets, putting on, taking off trades, explaining every move they make, every trade they take, and the rule behind it, and answering your questions while you're learning. To become a member of the family, you just need to go here, eminifuturestrading.com. Couple of mouse clicks and you become a lifetime member, a passport holder. It's your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. There's no upsells, there's no recurring fees, not monthly, not annually, not ever. 9 out of 10 new traders are going to fail simply because they don't have someone to teach them how to do the job. They don't have a trading plan, they don't have a business plan, they don't even know they need those things. Along with the 2 hours of live training every day, you've got around-the-clock support via Telegram, unlimited one-on-one private mentoring, the strategy that you'll learn and the indicators that you'll own for life are fluid across all markets, all time frames. Futures, stocks, crypto, forex, 1 minute, monthly, tick charts, range charts, doesn't matter. Price flows the same across all markets and all time frames. Why does no one else ever tell you this? Because they had a million different things to sell you. We got one thing right here. And it gives you unfettered access to everything we do. So, ball's in your court. eminifuturestrading.com. If you have a question, call 949-42-EMINI or send an email to support@cfrn.net. Now let's wrap it up with our good word for the day. For the last few days, we've been talking about caring for the needy, for the poor. Today we're going to talk about God's love for you. Ephesians 3:19. To know Christ's love, that surpasses knowledge. Princess Alice was Queen Victoria's daughter. When her son contracted an incurable disease called black diphtheria, the doctors quarantined the boy and warned his mother to stay away from him, lest she also get infected. She couldn't do it. One day she overheard her son whisper to his nurse, "Why doesn't my mother kiss me anymore?" His words melted her heart, and she ran to him, smothering him with kisses. Within a few days, she died and was buried. What would compel a mother to risk her life for her child? Love. Now, stand at the cross and ask what would lead Christ to do something even greater for us? Love. Writing to the believers in Ephesus, Paul says, I want you to know Christ's love surpasses knowledge. You can trace the greatest action of Christ to his greatest attribute, love. Perhaps the people who should have loved you didn't, and those who could have loved you wouldn't. Maybe you were left at the hospital, or left standing at the altar, or left with an empty bed and a broken heart. Regardless of the cause, you were left with the question, does anybody love me? And today, Christ answers unequivocally, I do. The truth is, his love for you is too wonderful to be measured. Hymn writer Charles Gabriel wrote, I stand amazed in the presence of Jesus the Nazarene, and wonder how he could love me, a sinner, condemned, unclean. How marvelous, how wonderful, and my song shall ever be. How marvelous, how wonderful is my Savior's love for me. God couldn't love you more than he does right now. And that will never change. That's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.